What's up, guys? Sam, D, KT, what's up, everybody? Give it a few minutes, let some people come in. Thanks, KT. Same to you, brother. Few minutes till we go live, or till we start the show, guys. Looks like I think a handful of people in here. If you guys could retweet the tweet I sent out, or tweet your own tweet somehow, guys, share the link. Let's get as many people in here as possible. I'll give you guys more details later as we get into it, but there is going to be a giveaway during this live stream, so the more the merrier. Bring some people in. What's up, Ryan? Sean, how's it? Good to see all you guys back this Sunday for another episode of the Sunday Prep. Hopefully I don't seem too distracted. There is a football game on one of my monitors right now. Pretty important football game. What's up, Rick? Simon. Irfan, you are Simon in True Cherry, right? I'm just making sure I'm not mistaking you for somebody else. There's Raul. We got Raul in here. We got Craig. If anybody's wondering why Craig's telling me good morning, he lives in Australia. What's up, Greg? What's up, Yogi? All right, man. We are getting some people in here. That's awesome. No, I recognized you last week too, Irfan. We're going to kick off here in just a second. You guys like my new addition to the let's see, this thing here? This is my scoreboard, so you guys can see the score of the football game without having to leave the Sunday prep. What's up, PG? I am watching the Kansas City versus the Cincinnati game, rooting for KC, of course. All right, guys, so let's go ahead and get this thing started. As always, if you're not already, please subscribe to our YouTube channel and turn on the notifications so you don't miss things like Goose's Midweek Watch. Last week, put it right over my face. Last week, he did a really good midweek watch on Thursday morning, talking about, are we getting close to time to start putting capital at risk again for some of these bigger picture plays? And, the bigger picture plays, meaning the thought process needs to be, when we see major market pullbacks, that they need to be viewed as opportunities. And I couldn't agree more. So if you guys are not familiar with that, make sure you check out his midweek watch. They are all on our YouTube channel. You can go watch them in retrospect. And make sure you don't miss them live. They're Thursday mornings at, I believe, 8:30. So you get, that half hour window from 8:30 to 9, then that gives you another half hour to kind of settle down and get ready for the market to open. As always, Cobra, guys, is the broker of my choice. And if you guys want to use Cobra, there's a link in the description of the video. It's going to give you 25% off your commissions, as well as 1 free month of the platform or of your choice. SpikeEat, that's the company I use for tracking historical data and back testing whether or not an idea of mine has a statistical edge. Scripts to Trade, guys, is by far my favorite tool to use as far as indicators and stuff that you can put on your chart. And you know, if you guys aren't familiar with them, here's one of their tools right here. And that, of course, is their Warzone script. They have a few other amazing ones. They got volume forecast, unusual volume indicators. They've got everything you can think of. Make sure you guys check them out. And real quick, just want to make sure you guys understand, we have a huge week of earnings ahead of us. Just like last week, you know, this week is arguably just as big. Some really big names in there like AMD and Amazon and Facebook, or as they now prefer to be called, Meta, which is sounds kind of beta to me, but whatever, it's Facebook. All right, guys, so the topic we're going to talk about today is contingency plans, how to plan for all scenarios, right? And you're really going to see why this is important when we get into the earlier part of the show, which is the broader market analysis, right? So, you know, we always can have a bias. We can always think, okay, high probability, this is what I think happens. But if you fail to prepare for the other situations, when your bias doesn't play out, you're kind of left out to dry because you don't have anything already planned and ready to go for the opposite or other scenarios, right? So it's super important to make sure you guys understand, like, anything can happen in the market. And in fact, I argue all the time that most of what we see is absolutely random. And just because something's random doesn't mean you can't make plans for it and have if-then statements, because I don't give a crap how random something is, as long as you have the correct risk management principles and the ability to say, if this, then that, you can still create plans that will generate you profits. So why is it important this week that I talk about this? Well, you know, the market has arguably been in some really kind of turbulent times. We've had a major pullback from the highs, and you have a lot of people out there that are kind of wondering, is this the beginning of a correction? Have we found a bottom? Are we going to go back to highs? There's a lot of questions, right? And the truth is, nobody can give you a definitive answer, but you definitely have to prepare for every scenario. And, you know, if you understand how to read markets and how to read trends, you have the ability to go back historically and look at times that resemble what we are going through now and see what happened. And just because it happened this way in the past doesn't 100% mean it's going to happen now, but it gives you the ability to make these plans. And it's super, super important. I can't stress this enough, guys. So, you know, instead of really rambling on about it any further, what I am going to do is we'll just do the disclaimer real quick, and then I will use this topic while we talk about the broader market, all right? And real quick, I want you guys to participate in the chat today because we are doing a giveaway later in the episode. So make sure you stick with me. Don't just tune out after we finish the intro or whatever. Stick with me through the ideas. There's going to be a giveaway. I think it's going to be 2 winners possibly. And it's I think like a hat and a backpack or a t-shirt or something like that, but something pretty cool if you guys just stick around. And the way you're going to be entered into it is by adding value into the chat, the live chat that you guys see on your YouTube channel. So without further ado, the disclaimer, guys, neither I, True Trader, or any of its affiliates are registered as security brokers, dealers, and not a licensed financial advisor. Understand, trading is risky, and you must you must assume those risks. Everything you hear about from my mouth today is strictly for entertainment purposes. It is not a solicitation to buy or sell any stocks. All right, guys. So here you guys have it. Here's your ES chart, the weekly. I mean, we can start with the monthly, and it's not going to be much different from what we said last week, because this is still the same monthly candle, right? We're still in January until Tuesday, I believe. I think, right? Tomorrow is the last day of January. We close the chapter of the first month of the year and we move into February. Once we move into February, we'll have another candle starting on the monthly chart, and then we can begin to look at what may or may not happen on the monthly time frame. But we can make some assumptions, right? We can say if we kind of close somewhere in this area on Monday, or we don't go and lose lows, we can kind of get an idea of the candle we're putting in, right? And no matter what, unless we somehow really cruise higher and get a really strong close, we're probably going to end up with a pretty ugly monthly candle in January, right? So let's go into the weekly, and here's what I want to talk about, guys. So, I mean, it's really not debatable that we have broken some pretty serious levels, and some things have been breached, and there may have been some structural damage done to the overall trend. I mean, this has been a very, very clear-cut uptrend for quite a while. And we can sit around all day and debate why that may be. Is it rates? Was it QE? Was it whatever you want to call it? It's not really important to understand. Well, okay, I don't want to say it's not important to understand the why, but we just have to be able to understand the black and white, what's happening with trend. The trend was up, and now there is the possibility that we're seeing a trend change. It's not bad or good or anything in between. It's literally just is what it is, and we need to be objective. We need to be rational. We need to admit what we're seeing. We need to trade what we see, not what we want to see. So it's important for us to go back into historical times and see, were there other times where we saw things similar to this happening? And there have been. And I'm going to go all the way starting back at 2000, the 99 tech bubble pop. And just to show you guys, I want to show you a few things, okay? So here we had a nice uptrend, and we put in a lower high, and then we came and we made a lower low. And once we did that, once we came under the weekly 20, the pops back into the underside continued to make lower lows or lower highs, and then we'd roll over and go lower. And if you were trying to fight that trend, you might have gotten hurt. As long as you were able to acknowledge that it was going into a downtrend and trade what you see, you could have at least at worst case scenario, you could have been sidelines and not been touching the longs, or best case scenario, you could have profited from it by shorting things. Now, then we fast forward a little bit, we finally hit a bottom of the bear market, we start cruising back to highs, and then we hit the great financial crisis, right? Oh, and I guess it should be said that that from high to low, of this bear market was 50%, okay? It was a 50% haircut in the market. Then you have the tech bubble, or not the tech bubble, the great financial crisis, okay? Again, as long as you were objective and noticed that when we broke trend, when the uptrend ended and we started putting in lower highs and making lower lows, you could have at least protected yourself from getting hurt. Another, this one was 57% from top to bottom, okay? Now, are all bear markets or all trend changes, do they all result in this? No. And so I want to fast forward to 2015, okay? Right here. Again, we are seeing something very similar to this, and 99, 2000, and 2008, 2009 started out like this too. They all start out like this. But what I'm trying to point out is that they don't always end the same way, okay? So lower high, lower low, and we push up and we make another major lower high, and then we come lower. But that was all she wrote. We got down to the pretty much to the weekly 200, and this was like I think it was a 20% from top to bottom. Let's check it out. Oh, this one wasn't even 20%. This was 15%, okay? And the other one that was of note was 2018, the end of 2018. Which was right here, and you get a lower high, and then we came down and we never even made the lower low. Now, granted, we can look at a daily chart and definitely start to see it look a lot more bearish than it looks on the weekly. But again, from highs to lows, what was it, 20? No, that one was 18. So what, no, this was the one I was trying to point out. I knew that looked too shallow. You guys should have been laughing at me right there. This one I think was 20% from high to low, okay? Yep, 21%. And what I'm trying to point out here is, you know, back into the weekly 200, and that was all she wrote. So I'm not here to put fear in anybody. I'm here to just point out things that we need to take into account. And one of those things being, I always say this, it's not the pullback that I care about. It's what happens after. Because we've had a decent pullback. It looks like for the time being we found some support. Now we don't know if this support holds or not, but I feel like until we have a major rally back up into some areas of resistance, the path of least resistance is most likely going to be to the upside, at least in the short term, because things don't just go straight down. In the same way, they don't just go straight up. So we've had a pretty straight down move. It's been pretty heavy and pretty fast, right? The decline from the highs to where we got to did not happen very slow at all. So eventually, you know, I think we're going to have this rally. Now, what I care about is, what does this rally do? Do we push up into these levels and just make a major lower high and then roll back over? Or do we go back to all-time highs? Or, and you know, you got to keep in mind, there's always the ability to also go sideways for a while. We may just set some ranges, okay? So, you know, here's our pullback. Now, do we bounce up here and then come lower? Or do we do one of these where we put in a higher low here and then go? Or do we just kind of chop around, go sideways for a while? I'm not sure what happens, but this is why I was trying to focus on this week, is we have to have plans for all three of those scenarios. So that's the goal this week, is to make sure that you guys all know how to do that. Let me get rid of these drawings. Squiggly lines everywhere. Okay, so that's why it's important to have plans for all three. I don't want to put in a major lower high up here and then have it start rolling over and only have plans for if we were to go back to all-time highs and resume the bull trend. I need to make sure that I prepare myself for the fact that maybe we do go into a correction. Maybe we do come lower. And if we do, I don't want to be one of those people that's too stubborn to acknowledge it and get hurt. So let's jump into our daily chart where we can see a little more of the nuance. Now, a lot of charts are going to look the exact same as we start going through charts. I mean, hopefully you guys have gone through charts this weekend, but a lot of charts are going to look just like this. They're going to have these big pullbacks, and we're going to have these ranges that we've been setting, right? Some things have pulled back a lot deeper. Some things have had more relative strength, and their pullbacks were shallower. And then there are some stocks out there that have had extreme relative strength and, you know, didn't even really have pullbacks. So, but just keep in mind the major markets like the NASDAQ and the SPY, as well as, you know, some of these other things we'll take a look at in a little bit, are all going to have this similar chart, right? So from here, if we, you know, you can obviously see it's easier to see it on a 120-minute chart. In fact, might as well just go ahead and take a peek at that one real quick to show you guys. Here's a 120-minute chart. So now we are setting this range, right? Pullbacks, keep holding these levels. So, you know, if we break over this 44.48, let's just call it 44.48 level, that should trigger us back to the upside. Now, if we trigger to the upside, the question then becomes, where do we get to? First resistance for me is going to be up into this monthly pivot, which puts us right into the underside of the 20-day. But remember, as I always say, I actually look at these things as more of a range than I think this whole little box I'm drawing here is going to be a very tough resistance level to get through. So everywhere from 45.60s up to the 50-day, which is 46.30-ish, is really just a retest of the underside of this trend line, and there's going to be a lot of resistance, in my opinion, up there. So first attempt, if we just slam up into those levels, I feel like there's going to be a ton of really good short opportunities, because even if in the long term we end up curling and going higher, I think first attempt into those levels is going to be way too much for us to just get through first try. So any pushes up into these levels that happens quickly is going to be high probability shorts for me. Obviously, then the next area becomes this 47.15 area as well. I mean, we'll just call it a range, 47.15 up to 47, we'll call it 47.50. Again, until we start seeing, just like I always say, the pull back isn't what matters, it's what happens after. Same thing with the push up, right? Once we push up, that piece of the puzzle is done. And then it becomes, all right, now what happens next? Do we pull back and make a higher low? Like I had kind of drawn with that squiggly line, right? Like, just try to stick with me here and picture this. A pullback, a push up, a higher low, and then we curl and go. That still involves that initial push up stuffing and pulling back. So that's where that short play comes in. Then we might find some support, curl, and be ready for another leg higher. I don't know. Unless we come lower and start losing some levels, again, even on the way down, I don't know if we get through these lows where we found support. I don't know if we get through them first try, but we can start planning for, if we make a major lower high, we can start planning for the fact that there may be some more downside to come, and we can start protecting ourselves. Now, the other thing that might happen is we might push and stuff right here. We might never even get the bigger rally, and we may come and lose these lows. So one of the things I've noticed on the weekly chart, guys, is the fact that even though we lost this major level here, we never closed below it, right? And you can really see that on the daily as well. We never closed below this. We actually shot right back up, and then every subsequent pullback lower held that level. So, in defense of the bulls, they really did defend that level very well. Even though it breached briefly, they reclaimed it, and it defended very well. But we come back under that level, I'd be watching for us to hit our head on the retest of it and come lower. So, obvious support's going to be those lows. Again, we don't know if we're going to gap up or gap down come tomorrow morning, but depending on where we open will also depend on, or will kind of factor into what support levels come into play first. For me right now, knowing what we have in front of us, it's last week's lows become that first major level of support. If we lose that and just come straight down, there's not a lot of stuff below us that I feel is going to be major support, except maybe that 4,000 psychological level, which puts us right into the monthly 20. Okay, so that's the outlook on the SPY. And notice, it's all about contingency plans. It's about knowing the three possibilities that can happen. We can go higher, we can go sideways, or we can go lower, and everything in between is some form of that, right? So it's just, there'll be nuances to it, but those are the three things that can happen, and we have to have plans for all three. And we also need to know what to look for to acknowledge which one of those things is playing out in front of us, okay? So first thing I really want to see is what happens if we push higher. Do we start finding a lot of resistance up there? If so, I want to be looking at the shorts. If we pull back early on and find support against last week's lows, there's quite a bit of things that are setting up for some long plays too. So, I'm going to have quite a bit of it's going to be a bounced look this week as far as what my ideas or my biases are. I noticed Cincinnati tied it up right there, so that's not good. Let's go Chiefs. So hopefully you guys are also getting involved in the chat. Remember, there's going to be a giveaway later in the stream. All right, let's move on to the NQ. Again, looks a lot like the SPY, right? We had that major pullback and we set a range. So next push up into this the underside of the 200-day, which is going to have that monthly pivot, and it's also the psychological 15K level. That's going to be the first resistance for me, guys. Unless we were to gap down, there may be these highs from last week that come into play, 14.57. I can see those being kind of like an intermediate resistance if we were to gap down and have to get through those levels first. But, we had a really strong close on Friday. I personally would like us to gap down a little bit so that I can get long some of these names with risk under last week's lows. But if we don't and we push up the underside of the 200-day and that 15,000 level, that's the first resistance I'm looking at. And, if it doesn't happen on Monday, the longer that takes to happen, the more this 20-day is going to creep down right into that same level, okay? Above that is the 50-day and that quarterly pivot at 15,000, what is called 15,008. and that'll be resistance. Underneath, obviously last week's lows, and then you have got an annual, monthly, and quarterly pivot all right there in the same area, which is all right around the monthly 20, right around 13,500. It's just below, right in that 13,400 pocket. So moving on, let's get into the cryptos. Crypto's still kind of in no man's land for me, guys. I still think the pop back into this 40,000, let's just call it 41,000 level is going to be that area I'm looking to see if it stuffs. We haven't tested it yet, right? We kind of just went sideways pretty much last week. And until we start testing either the resistance or roll over and come lower and test some support, I really don't care about any of this in no man's land area. So 28,000 to 30,000 is that area where I'd be interested to see if the bulls show up, and pops back up into 41,000 is where I'm looking for the resistance. So that's it for the broader market, guys. Make sure you guys, the real key takeaway there is contingency plans and knowing that there's multiple scenarios that can play out and you need to have plans for all of them. Let's get into sector analysis. This is barchart.com. As always, head over to our stock market sectors and look at the short-term matrix. This should really come as no surprise, guys. It's kind of like a mixed bag. Again, you know, I always look at the ETFs to kind of see what's really happening under the hood. Let's go through them real quick. Retail still, I think any pops back up into this 85 to 86 area is going to be resistance. I think bulls have a lot of work cut out for them to make this thing look bullish again. Now, finances stayed, yes, we came outside of this channel, but they reclaimed, very similar to what we were saying about the ES and how the bulls did a really good job at defending that support level, even though it came below. Came below, but never closed outside of it. So, yes, we breached. We'll see. I still think that this still looks intact. We'll see what happens this coming week with all the names in that sector. I have a few on my list this week. I don't really trade too much in the real estate sector. I do. I will point out this sector later. Keep that in mind, guys. I don't do too much in the materials either, but again, a lot of them all look the same, right? They've all had major pullbacks from the highs and then have set these ranges, right? So it's going to be no different than what we were talking about with the SPY. I'm very, very interested to see what happens if we push back up into the 20-day. Do we put in a major lower high and then start to roll over again? And if so, I'm getting prepared to protect myself. And, I've already moved quite a bit into cash in my long-term accounts. There is some more stuff I will sell into the rally, guys. So that's another thing I forgot to say. And I don't really talk too much about my long-term stuff, but the way I treat it is, when I start to see things that look like a correction, I do have some longer term positions on that aren't so old that they're way in the money, right? If they're not way in the money, I will protect myself and I'll take those completely off and go flat in those names on a rally into the levels where I'm expecting resistance to show up, and then you can always put positions back on, guys. I just don't want to. I'm not in the mood to ride anything down if this is going to be a correction, whether it be a 20%er or a 50%er, right? It doesn't really matter to me. I'd rather be patient. There's always signs of a bottom when we do hit a correction. If you guys go study historical charts, you can always be patient for higher lows and the trend to change the exact same way we're pointing out with looking for a market top, okay? The industrials, same, don't really trade them too much. Utilities, I am kind of interested in Duke Energy, which, that's an energy stock as well. Make sure you guys understand a lot of stocks will be in multiple sectors, but I keep an eye on this one because I do have an interest in certain names. The consumer staples still look very, very strong, right? Out of all the ETFs, definitely, in my opinion, the most bullish of the charts, all right? This one still looks very, very bearish. I think pops back into this 190 level, really going to have some trouble. Tech, the communication sector, like I said, looks like they went ahead and just started a bear market on their own. They were screw waiting for everybody. The biotech's no different than what I talked about last week or the week before. I still think there's a lot of names that are trading under cash, and that's going to be this sector. I feel like it's very soon in the very near future is going to be a stock pickers market. If you guys have put together a list, all you need to do now is just kind of wait for this market to turn, because biotechs have come way in, and eventually this is going to get a big bounce, I think. Tech, here's tech again, a lot like the NQ, lost a major trend. I feel like pops back into the underside of the 20-day, at least on the first attempt, are going to be very good short opportunities. And of course, energy and oil still looking bullish, just like we talked about last week and the week before and the week before and the week before, right? These charts trending very, very well. Higher lows, higher highs, breaking out of major long-term downtrends, and so far no signs of slowing down. So that's the sector analysis, guys. We're going to get straight into the ideas. Let me just make this the main scan, and let's start, guys. So this one is from last week. If you guys remember, Morgan Stanley never triggered the way I needed it to get involved last week. If you remember last week, we just had these two green candles here, and I had needed it to push over some levels to get long, and instead it gapped down and it really took that play away. But just because the play got taken away last week does not mean that there's not a play this week. It still looks strong, guys, and we're still making higher lows on the daily. So you see I have an alert set. My plan on this name, and you're going to hear this a lot this week, is to kind of try to buy a flush against Friday's low a day. I mean, I don't know how low of a pullback we'll make, but you can see you got the 50-day and the quarterly, and then even lower you have the monthly pivot, all right down there towards the lower 1/3 of Friday's price action. So I'm very interested to see, hopefully, like last Sunday when I did this prep, the very next day we woke up and the stock gapped down. Hopefully it doesn't gap down. Hopefully it just kind of opens. I mean, even if it gaps down, hopefully it doesn't gap down so far that it takes the play away. But I'm looking for early weakness to flush us down towards Friday's low so I can scoop it. The other way to play it for me is a break over, let's see what I wrote down, pretty much over 102. So if we push over 102, then I'm going to look to buy dips and join trend, because I think this thing could be wanting to push up to this 106 area. So that's MS, Morgan Stanley. Now this one I know is the same sector, guys. This is both financials, Wells Fargo. I really, really like the look of this chart. We've had a major pullback into the 20-day. We've pushed up and we've made a higher low. I'm trying the same thing as Morgan Stanley. I'm trying to get long on a flush right into Friday's lows. You have that monthly pivot at 52.91. And again, if it breaks, there's two ways I'll play it. If it gives me that morning flush, I'll buy it with really defined tight risk. If not, if we break over 55.50, I'm looking to buy dips and join trend on the name. Next stock I'm looking at is AA. Now this one, make sure guys you understand there's all kinds of different ways I look to get involved in these names, and just because you know the level I'm looking at might not mean that you understand the way I would actually trade it. And so sometimes I know that there's very little chance I'm even going to get what I want from this, and this is one of them. Okay, with the way this thing closed, this daily candle makes me think we're not coming back down here. But just in case we do, I want to have it on my radar. I really, really want a flush down into 54.80s, guys. You got the 50-day and that quarterly pivot. I just think that would be a very, very strong level for me to buy an emotional flush. But based on the daily candle from Friday, I highly doubt we get it. But if we do, it's on my list and I'm ready for it, okay? So make sure you guys understand there's differences between these ideas. And I try to articulate them, but sometimes I get going so fast in these live streams that I just forget them, okay? Next idea is CF. 69. I have 69.20 to 69.50 written down, and this is basically based off. I know that last week's pivot is 69.20, and next week's weekly pivot is going to be 69. I think 48. I wrote down, 69.48, and it's going to put us right into this. Let's see. I guess I could pick a little lower of a time frame. So it's going to put us right into this little trend line. We've had the pullback. We've pushed up. We're holding this. I'm looking for just a quick little flush down to that 69.50. If it comes a little lower, I'm still okay with it. You have the 20-day right under there. Let's see. 68.45 is currently the 20-day. We'll see where it's at tomorrow when we open up, but I am looking to get long on CF on a flush. Next name is CTSH. And this one, again, is I'm looking to get it long off early weakness. I don't, obviously there is a very strong level of support from the last 3 days. But with this big green candle that it put in, I don't want to see it come back down there and test those levels again. So we get down to those 8160s, low 81s. I'm probably not seeing what I would like to see that shows me strength. What would show me strength is actually a shallower flush, right? So for me personally, what I wrote down was 83.30 to 83.50. And again, this is based on this coming week's weekly pivot, which will be at 83.54. And you can see, let's look at a 5-minute chart. You can just see we had these two little quick flushes out where buyers showed back up. It's right in that 83.50 area. And then you have this 83.30 area, which, was prior resistance. Now we're above it. I'm looking for this little range to act as support. Again, I don't want to see this come all the way down to 8160s because that's not showing the kind of strength that I would like to see. I'd like to see a shallower flush on this name. So that's CTSH, call it 83.50, okay? Next name is DWAC. DWAC this is a very good looking daily chart right here, guys. It had the momentum, the volume came in, it had a major pullback, and this was with the market, right, guys? But it found support at the 20-day. And so far, we've pushed up, we've made a higher low, and I'm looking for two things. Either flushes down towards Friday's low a day. I don't know if I really want it to go, again, just kind of like CTSH. I'm not sure I really want to see it get all the way down to Friday's lows, but that 20-day and that monthly pivot going to be right there in that 66, let's call it 66. But if we get above 73.56, that should send it. I'm not very big on chasing a name like this. I don't really want to be chasing it above 73.56. That's why I'd like to try to get involved in it earlier on any sort of flushes and then see if we can let the trade work, because it looks like it's primed for a break over 73.56. I would like to see that, but I'd also like to have a position on from lower. And then if we get the break, we can add to the position, scale into it, and let the trade work for us. So that's DWAC. Remember, these are all long ideas. This is the section I consider strong stocks looking for continuation, guys. J&J is the next idea in this list. Now, this stock has been very strong, and I don't think this is necessarily a Monday setup because the level I'm looking for is this pocket down here with the 50-day, the quarterly, and the 200-day. I was going to call it 167. Any flushes back down to 167, and I would like to see if support shows back up. For the way this thing has been on a tear, I think it's probably going to go up here, test this 174 level first, but I'm not chasing it. And when something's had a big move like this from 158 up to 170, I'm not trying to chase that strength. I want to let it kind of come back in, set some levels. So be watching this name if it pulls back to that 200-day, 50-day area. Last name on this list is MPC, and this is from the oil sector, guys. So no doubt that there's been strength here. And again, you guys should be used to seeing charts that look like this. Pull back to the 20-day, find support, push up, higher low, over this 73.40-ish area, should send it. Let's see what I wrote on it. So this one, I'm not looking to buy an early flush, risking Friday's lows, none of that here. This one, I would much rather wait for it to show me the strength over 73.50 and then look to buy dips and join trend. So that's it for the strong stocks looking for continuation. The next section is oversold reversion setups. First name on the list is ASON. I believe it was on last week's list as well. And it just finally got down to the levels I was watching it last week. So I'm still interested in this. I still think, if you guys want to know where this line came from, it's this major breakout area from back in June of 21. Okay, so had a massive run and it's come way the heck in. So I really like this level. I like the fact that the buyer showed up on Friday, held that level very well. So I am looking to, again, buy a flush, risking Friday's lows. I'm trying to get in as close to Friday's low day as well. Next and last name on this list is Square, or Block, as they've changed their name too. I don't know what's all these companies decide to change their names, but I feel like support's in. And there's, I have this alert set for over 121.56. I feel like that sends it back up to the 20-day. Again, I don't want to chase this one, so I am looking to buy a dip. Actually, no. What I wrote down on this one is, and see, that's one of the things. It's hard to talk about in a quick little, 1 hour live stream, guys. But I have different ways of getting involved in things. So what I'm looking for on Square is what I consider a bullish opening long setup. And what that is, for me personally, is I will look for one of two things: an opening red 5-minute candle that pulls back, and then I want to see the next 5-minute candle be a green candle that breaks the high of that opening 5-minute candle. And that's kind of the long trigger, risking the low of the opening lows. Like that opening red 5-minute candle, stop would go under that. If I get an opening red 20-minute candle, same idea. It's just a little bit longer it takes to develop, right? So if the opening 20 minutes produce a big red candle and then the next 20-minute candle is a big green candle, I buy it through the highs and I set my risk. So that's a way I like to get long on names where I think they've pulled back to some levels. Again, you guys need to learn these setups and see how they work for yourself. Don't just copy me. I'm telling you guys, the real key takeaway in these things is learning how to fish for yourself, not learning how to copy me. So that's the idea on Square. Opening bullish setup for me personally to get long, because I think, we can get, again, I'm looking for the market to make this rally, right? So we've had a lot of names that have had these pullbacks and have shown support. So it should make a lot of sense, right? That if the market's going to have a big rally, I should be looking for names that have shown support. I want to get long. So if we have that rally, these names can go. And that's the idea here on Square. So now we're into the short setups, guys. The first name on my list is LI. And this name, you can see, broke a major level of support last week. I'm looking for a retest of that area. I've written down, I don't want to be too early on it, but I'm hoping that, it makes a major pop up into the mid 25s. There's the quarterly pivot 25.86, but you can see this recent push that stuff with 25.50. I'm going to kind of just be patient and look for lower highs after it makes the push. But I think LI is going to offer a really nice short on the first attempt up into those levels. So that's LI. And if you guys remember from all the previous Sunday preps, guys, I've shown you the way I look for these. I'm looking for stocks that are weak, and I'm looking to short them on a pop back into typically the 20-day, but sometimes it's the 50-day. Sometimes it's an important breakdown level. These are the stocks that, I wouldn't get long these names with my enemy's money. That's the kind of idea here. Next idea in the same sector is BX, Blackstone. I don't know why I just got that. Now, this one, like I said, sometimes it's under the underside of the 20-day, sometimes it's the 50-day. This time it's the 50-day, and that's also going to be the weekly 20 and the quarterly pivot, right up there in the 128 to 129 level. BX for a fade on a spike. And you have to understand, if it gets up there, it literally just came from 101. So 101 all the way to 130. It's going to need, in my opinion, to take a breather, and I want to be there for it, all right? Next idea on this list is AFRM. Whoops, where did I type that? AFRM, again, into the 20-day. You can see it acted as resistance here on January 20th. 68. I see the monthly pivot there at 68.16. I really think I'd rather wait for the quarterly. It's going to depend on where the 20-day is at as well. But so 69, we're going to call it 69.50 on this one. All right, guys. DHR, the last name on this list is DHR. And again, you can see it had a major breakdown. Once it lost this level, the push up underneath the 200-day stuffed it, and it came down lower. Now, the 20-day is threatening to come underneath the 200-day. I think any pop into that annual pivot at 291 is going to be a pretty good short. So I'm looking to short DHR. DHR, the sector. This is kind of like, let's use our brains, guys, is health technology, medical specialist. The next section is overbought reversion setups. Now, remember I told you guys there's going to be a giveaway. All right, so the giveaway, in order to be part of this giveaway, I'm going to ask you guys a question right here, and I want to see some answers in the chat. Anybody whether you're right or wrong, it doesn't matter. But anybody that puts an answer in there or gives this a shot is going to be entered into the drawing here in a second to win something. So put you guys' names in, and I believe we're going to choose 2 winners, all right? So make sure you put it in the chat. So the idea is, well, here's the thing. I have 0 names on my list this week for opening or overbought reversion setups. But I am interested in CVS, okay? So if I wanted to short CVS, what do you think is one thing that I would go and look at first to give myself any sort of indication that I might want to get short this name? If I was looking to short CVS, what would Ricky go and look at? And remember, I've given hints kind of earlier in this live stream. So let's see some answers, guys. Anybody that puts an answer, guys, is going to be entered into the drawing here in just a little bit. So make sure you guys throw those answers out there. And I'm going to give you guys a hint as well. It's not anything on this chart. It's nothing on the CVS chart. What's something I would need to go look at first? I am monitoring the chat to see if anybody gets the correct answer, okay? Remember, it's nothing on the CVS chart. I see a lot of good answers, and trust me, there are no real wrong answers, because I would probably go look at a lot of things, right? But what's one thing that I've been kind of hinting at about what I would go and look at? Ooh, and Cliff Kelly with the answer. Oh, I love it. There we go. Calico's in there. I mean, and remember, everybody that puts something in the chat is going to be put in the drawing here. So, and trust me, there's a lot of people putting answers in here that are very good things too. But you guys are pretty spot on here. Now, High Trader's got his work cut out for him, because High Trader has to get all these names into a list for me. Oh, that's friggin' hilarious, Grandizer. Grandizer said I would ask my wife if she's buying it, and that's probably the best indicator too if something's along, if my wife decides to buy it, and I'm not joking. So all right, Raul says he's got this under control, and everybody that talked about XLV is 100% correct, guys. Remember what we talked about earlier in the thing, where the sectors, I want to know what the sectors are doing, and I pointed out this sector. I said this sector, I think a spike into the underside of this trend line that it lost puts us right into some serious resistance. The monthly pivot, the 20-day is going to be coming down there, the weekly 20. There's a lot of stuff. And so what I've done, you guys can see this alert I've set. I have an alert set there. And what does that alert say? Let's hover over it. When I hover over this alert, it literally says, look to short CVS. Because if we rally up into this level here, that makes me feel like CVS will probably be quite a bit higher than it is right now. So hopefully we're, pushing up into 115. I have no idea, but the further, the higher, the better. But I want that sector to be coming into some major resistance. Now remember, I'm not an idiot. I know that it's not the tail that wags the dog. It's not the sector that's going to affect CVS. It's the names in the sector that affect the sector. But if all the names are pushing into levels of resistance and everything just gets heavy, when sector weakness starts to show itself, lots of names follow. So if you guys got that answer correct, congratulations. But again, I really wanted to just get you guys thinking, and I'm actually really happy. I saw a lot of really good answers in there, guys. So I'll start going through some of the questions from the chat as well. And while I'm doing that, I think High Trader is going to be kind of compiling the names in the chat log of people that gave answers. And so I'll be waiting for that, Raul. And meanwhile, I'm going to go through these questions, okay? So Simon's asking me, was Friday's rally fueled by short covers? If yes, is that a false indication of a bottom? So this is a perfect example of a question that nobody can ever give you a 100% confidence or high confidence answer. There's no way of knowing for sure. Now, you can definitely, prophesize if that's what caused it or not. But what matters to me is, does that somehow equal a decision that I can make on my part? And the answer is no. Like, because I can't definitively say whether it was or not, it cannot possibly play a role in my decision-making process. So that's why I always stick to things that are only objectively observable, such as trend, right? So, you know what? Whether it was that caused the rally or not, it doesn't matter to me. What matters is what happens next. Do we make a lower high and roll over, or do we make a base and start pushing? That's the kind of stuff for me that can actually make a difference in my trade plans. I can't make a trade plan based off something that is so subjective or unprovable, right? Qs are still well below 200-day in contrast to the SPY. Does that have any significance for the bigger picture? It definitely makes, for me, the tech sector kind of like the weakest link, or it's not the weakest link, but it's definitely, if I'm going to look to short something, I want to short the stuff that's not as strong. So it does play a role in terms of what my targets become. And like when I say targets, I mean like my prey. Only if others don't have any. Is analyzing a VIX chart interesting? I analyze VIX all the time. And what I do is I actually track the VIX with my setups that I trade that are defined setups, because I need to know, do these setups work better when we're trading 30 at VIX, or do they only work well when we're trading 15 VIX, right? So I watch VIX all the time, but I'm doing so because I need to understand how it affects my system. Not sure how I got here, but hi and nice. How did you build your watch list? I build my watch list and thank you for joining us if it's your first time, and hopefully you'll be back. I build my watch list by going through charts and using screeners on FinViz. If you watched last week's prep, I actually gave away one of the screeners, the setup, and you can go and look and copy it, and it shows you how to go and find a lot of the things that are on my shorts. I look at sectors, I look at the broader market, and I make plans for stocks based on what the trend says. Hopefully that helps. Sean wants to know about XPEV. I'm going to assume you just want me to give you an opinion on what I see on the chart. It looks to me exactly like LI. If you remember the LI chart from my short list, this chart, they're same sector, very similar. They follow each other very closely. So exact same thoughts. I would most likely be interested in a short on XPEV on a hard spike up into 37. Okay. Which ones do you get in and out of? I'm not sure what you mean by that question. That was Dawn Peterson says, which ones do you get in and out of? Not 100% sure what you meant by that. Sorry. If you want to add clarification to the question, we'll come back to it. Okay. Thoughts on Dow Jones? Very similar to SPY, lots of resistance up here at the 20-day and the 50-day. Exact same thought process on it, right? Contingency plans. If this, then that. If we spike hard into the 20-day and that quarterly pivot up there, I have ideas for shorts. If we roll over and lose levels, I will be very interested to see what happens on subsequent pops, like especially if we lose last week's lows. When we pop, do we start running into resistance at earlier points like this 33,800 level, or do we reclaim and start to gear up and curl? So just like with the SPY and the NQ, make sure you have a plan for all those things. But at the moment, it looks broken, right? And so when things start to look broken, I start to look to see when we rally, do we put in a major lower high and then roll back over? Because I, just like anything else, I don't want to fight this thing if we're going to go into a correction. And again, we don't know, even if we do go into a correction, we don't know if it's going to be like a 2018, 2015 type scenario, or is it going to be like a 2009 or 2000, right? Like, are we going to take a 50% haircut or a 20% haircut? Or do we just put in a low right here, gear up, and get back into our bull market? But we don't know. All we can do is make if-then statements for all scenarios, okay? All right. Thoughts on silver? I don't really trade commodities at all. I mean, we can go look at it. So this is just an ETF for it. And actually, it's not even, let's see here. We can go look at the silver futures. I mean, it looks the exact same, right? So, I mean, right now, you have a big flag building. I mean, if I were personally going to trade this or wanted to know about it, I would set an alert right here over 67, let's just call it 67.7, or an alert under here, under these lows from September 27th. Why? Oh, it's a weekly chart, that's why. It's like, yeah, so under 58,000 pretty much. And, you know, right now it's kind of just coiling up and getting tight. So when we see things start to coil like this and get tight, I need to either see break to the upside and follow through, or break to the downside and follow through. For me right now, it's kind of in no man's land. Wait, let's see here. Where am I at? Russia-Ukraine invasion. Again, I pay attention to these things because I like to know about what's happening in the world. But again, the markets, if you guys remember what I said last week, the markets sometimes can actually predict things better than any human. And that thought process comes from that book, Thinking in, what is it? The Art of Thinking Contrary, or The Art of Contrary Thinking, I'm sorry. But that's a great book, and like I talked about it last week when we talked about this exact same subject, is that, you know, usually when everybody thinks the same thing's going to happen, the opposite happens. And, you know, so we need to make sure that, one, we need to know what the mass thinks. We need to know what the herd thinks. And then we need to start asking questions like, is it likely to happen if everybody thinks it's going to happen? Usually it's no. And so like the stock market historically has predicted some really crazy things like the end of wars and stuff. And those are kinds of things where a lot of times the herd thinks that it's going to drag on forever. And the market's like, nah, check this out. We'll put a bottom in and it's going to be bull market from here on out. And then before you know it, the war ends. So understand that I pay attention to macro stuff, but I'm not going to just start assuming that one thing's going to happen based on what happens with the macro. Hopefully that makes sense. Can you show us how to calculate percentage move based off the VIX for the day? I'm not sure if you're referring to percent, like how much you think the SPY would move or what. I mean, because obviously equities are going to be correlated in some form or fashion to their beta compared to the broader market, but I'm not exactly sure if you're talking about how much the SPY should move when VIX is at a certain level. Roblox thoughts. Last few earnings look like misses. I just think the chart looks like crap. I mean, it's below IPO price, right? So that's a broke ass chart, and that's all there is to it. No reason at all for me to think that I would want to be long. I think there's a lot of work for the bulls to do to get this thing back into some levels where maybe it looks interesting. And at this moment, nothing. Okay. I forgot. I did kind of want to talk quickly about some swings that I pointed out. We'll go through these real quick. LUMN, I think, looks great down here. I think this is a good spot to nibble. We're right around this low. I still think this chart looks really good. I like this chart. Obviously, it can break down. Things can always break down, come lower. But I'm rooting for this one to break to the upside. And if you were trying to build a position, I think these are the levels to do so. Again, make sure you understand if the market is going to go into a correction, keep tight stops. You know, if we're at the top of a bull market that's been going on for over a decade, make sure you understand that if that bull market ends, you don't want to ride any new swing positions too low. You want to cut them. Duke, I like Duke. I think Duke is very close to triggering. You see, this is a weekly chart, guys. So pull back, push up, intermediate high, higher low. Over these levels, it should go. I'm keeping an eye on Duke for entries on a long. I think MGM, I'm looking this week to buy MGM as close to last week's lows as possible. I think this thing's ready. And I like that we came this low. It's giving us even, if you remember, the risk reward initially was up around here around this 200 day. We got better prices, and then we got a bit of a reversal candle here. So I feel like if I can buy this anywhere down towards Friday's lows, now we're getting like 4-to-1 on the risk reward. And I'll take that any day, especially on something like MGM where I like this chart. LVS, that was the one that gapped and kind of took the play away. I like BEKE. I think this looks good, and I think this is the spot where I would be looking to nibble. I might be ready to add a little bit lower towards 17, but I like that swing idea still. That one's still valid. STNE never did what we needed it to do, and it broke some levels, and it's no longer valid. This idea is scratched. No harm, no foul, right? Hands were off. And EMR is one I'm starting to watch. I like Friday's low a day as a possible spot to get long. I think if this thing can get back over 98, this thing's going to have a pretty big push, with first target being 52-week highs. So this one is a newer one. I have not started a position on it. I am keeping an eye on it though. I just wanted to handle that real quick before we went any further. Let me check back on the chat for the High Trader got me the list. Let's see here. Go back to the questions real quick. Do you think risky to run the wheel in an overall downtrend market? Been tempted to sell puts on. So I don't trade that wheel strategy, bearish bull. That is something they do in the options room at True Trader, if that's what you're referring to, and that's like Options Mike teaches that. Not something I do. Not going to talk about it like I have any sort of expertise on it. All right. Can you kindly look at PBR with a long entry on pullback to 1280? PBR. Honestly, for me, if I was going to buy this on pullback, it's an obvious level here, guys. This is the level. The 20-day, it's going to be a little lower than what you're looking at, Yogi. I'm looking for a retest. If I wanted to get long this, I'm looking for a retest of that breakout spot. But it's a good-looking chart, and that's a good eye. So, to be honest with you, thank you, Yogi, for putting that on my watch. I'm going to set an alert on there, okay? Thank you, buddy. Do you think market is pricing in war? Again, I'm not going to talk more about the macro stuff. Kind of already addressed it. Not sure if you've already shared thoughts on Amazon. Would like to hear your analysis. So they report this. Is it this week? Let me go back to the earnings picture and check it out real quick. Yeah, they report Thursday after the bell. But this chart, they did not want to lose that level that they lost. They are trying to reclaim it, and I still think it looks really broke. I think any pop into the 20-day is going to really struggle. But remember, it might not matter because earnings are, binary events. So, like, it's not the same as this thing just organically trying to work itself back up into some levels and get bullish. If they blow numbers out of the water and this thing reacts really well, who knows where it's going to be. But so here's the thing I will watch. After numbers come out, if this thing still struggles, even if they have great numbers and it pops but pushes right into resistance, I think this thing could be very vulnerable. And remember, something like Amazon becoming vulnerable is pretty dangerous for the broader market too, because it's so heavily weighted. But remember, Apple reported last week too, and they actually. They have performed pretty well since the numbers came out. But again, they're into some levels of resistance. I'll be very interested to see what happens with Apple this coming week. But all the big names are all putting their numbers out last week, this week, and the following. So keep in mind, a lot of the earnings reports coming out are going to have a big factor on what happens with the broader market. All right. Guys, I want to watch my football game, so I'm going to get to the drawing. We're going to draw two names. Let's get back to the main screen real quick, and I can see my team is down by 3 points right now. So let me introduce you guys to the wheel. I'm going to spin this. Let's see how I do this. Where's the spin button? Oh, hold on 1 second. I got to figure out where the spin button is. Maybe I click. All right, first name. We're going to do it twice, okay? First name. Winning a prize is MTGO. MTGO. If you are MTGO. Now listen, if you guys win, shoot an email over to support@truetrader.net. I'm sure Raul is probably going to type it into the chat right now. So I'm going to remove his name from the winners list. MTGO, you're number 1. And we'll spin it one last time. Good luck, everybody. See who wins the second prize. It is Jay-Z, it looks like. Jay-Z, if you are Jay-Z, shoot an email over to support@truetrader.net. Thank you guys for, one, participating in the chat and adding value. I love to see participation. Thank you guys for being part of the Sunday Prep and coming and listening to the ideas. I hope you guys take away the value from this and, go out there and apply the knowledge to your own ideas. Remember, there's no wrong idea. The only wrong idea is to copy somebody. Come up with your own plans, guys. I will see you guys bright and early tomorrow morning at the market. Until then, go cheat.